What's up everybody? Welcome to the stock market. My name is Corey and today we saw a huge sell-off across the board, and I continue to remind you that this is a downtrend until it's not. We're at very critical support levels, so tomorrow will be very important to see where we're going from here. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today in SPY we were down just over 4% and we did squeak a close just below 393. So from here, this is going to be a very critical support zone, because if we start breaking down from here, we are going to that next leg lower. And that next leg lower, as I just said last night, could still be the possibility that it's going to be a double bottom off of support. And then the bulls could start to buy into this market as we drive prices higher. But more than likely, the next leg lower, if we continue to break down through support, will be down here somewhere around 370. So 370 is now within reach because we are losing support. So if we do start to break this previous low right around 385, you will be looking for a very quick trip down to 370. And at that point, we might see what could possibly put in a stock market bottom, but we are not going to bother calling the bottom. We are going to wait till price action reverses and we start to see higher highs and higher lows. So from here, if you are waiting to get bullish, you are waiting to see SPY make a higher low and then come back up and retake out the previous high with price action. And that will tell us that we're getting higher highs and higher lows. So in the event that we do bounce off of this support zone and do not break down below 385, you will be looking for a breakout back above about 410, and that should be confirmation that we are reversing the bear trend and we are starting to see bulls gaining strength, starting to gain some momentum, and starting to work against the downtrend. But until we see bullish price action, there is absolutely no reason to be bullish in a downtrend unless you are just taking day trades off of support levels. And make sure you are selling and locking in your profits, because the trend is downward, so you don't want to be swing trading long positions in a downtrend. Now, the one thing you'll notice is that we did go down on slightly increasing volume, but overall for such a bearish red day going down 4%, we did not see that high volume panic selling just yet. So this is very evident that we do have a buyer strike and there's just nobody willing to buy at these prices, which does mean we may need to go lower before we find that liquidity needed to drive prices higher. So all signs do point to at least retesting the lows, but anything is possible, and we did close barely below that support zone. And as I always tell you, I like to see a day of follow through. So tomorrow, the first thing I would pay attention to is whether or not we open above or below 393. And if we are below 393, obviously we're still respecting the downtrend and we're getting ready for that next leg lower. But if we are above 393, you will want to be looking for the potential that the bulls are trying to do something off of that support zone. And the next bullish breakout is back above 398, getting back over 400, and then breaking out above that previous high right around 408.5. Our 20 simple moving average is now just below 412, and that is going to continue to be a strong resistance until the bulls can close above it. So the common theme here that I continue to say each and every night is that it's a downtrend until it's not. So you should be expecting lower highs and lower lows while we're in the downtrend. And for all we know, we just put in a lower high before we put in the next lower low. So you need to continue to expect lower prices until we see bullish price action. On the NASDAQ 100 triple Qs, we were down nearly 5% today, and we did close back down below that support level at 297. And we did go down and fill this gap right around 291. So as I continue to tell you, this is a strong downtrend and we continue to put in these lower highs and lower lows. So the next lower low on a breakdown below 284 will likely have price targets that will take us to 276.8 or 269.5. If we get that double bottom look off of 285, that is going to be the potential to be a bullish setup, but we won't know it's a double bottom until we come all the way back up and start closing above 307. So while we do have price action still above 285, we cannot completely rule out the possibility that this could still develop into a higher low, but we will need to confirmation of the breakout by closing back above 307, and then we can start saying we're getting higher highs and higher lows, and we need to be patient and wait for confirmation. So you're looking for resistance now at 297, 303, and 307. And if we can get above 307, that will look like a small term bullish breakout, and we will start to see the bulls putting a dent in the bearish downtrend. Above that, we'll have very strong resistance at 318 and right around 328. So there is still a ton of work for the bulls to go against the trend and break through some of this upside resistance. So while we have this strong bear trend, we still have valid downside price targets, so you need to respect the fact that we could be heading down there next. Now you will notice on the triple Qs that we did go down nearly 5% on very pathetic volume. So this is very clear that we have nobody willing to buy, and it's just full of sellers and bears trying to drive the market lower, but there's just no buyers, and we're not getting that high volume panic selling that we were seeing back here in early May. If we start to see that high volume panic selling, you'll likely see the full-blown capitulation. But at this point, I do not think we are going to see capitulation because I think most people already sold that wanted to sell, and we're just not going to have enough people with skin in the game that can drive the market lower, that have tons of money in the stock market that are dying to get out at these prices. I could be completely wrong, but I do not see capitulation coming around the corner, and I do not subscribe to the fear that the market is about to crash. Obviously, the stock market doesn't care about anything that I say or anything that I think, so you still need to follow the price action. Jumping over to the Dow Jones, you could see we were down 3.5% today, and we are well on track to hit that price target down here at 310.5, and we're only a day or two away from possibly hitting that target. From there, I do think that could be a very bullish development because we will have reached all downside price targets on the triple Qs, the S&P 500, and the Dow Jones. But again, I continue to tell you there is no guarantee we have to hit these levels. It is just extremely likely while we have the bear trends. So watch that price target at 310, and below that we have the next price target at 308. And we're not getting bullish until we break all the way back above the 330s and get back over the 50 EMA. So look for resistance right around 323, 326, and 333. On the Russell 2000 IWM ETF, we were down 3.5% today, breaking back down below that support zone at 178. So we are more than likely coming down to close the gap right around 173, and then the gap down here at 165.7. If we go beyond that gap and we continue lower, you're looking for the next price target at 156, and you're not getting bullish until we get all the way back above the 190s. Upside resistance will be at 178, 183, and 191.5, so watch that very critical resistance and continue to expect lower prices as long as we're in the downtrend. On the ARKK ETF, we were down 4.43%, and we're back below all the moving averages with the price action, and we still have the bear trend, so we are more than likely coming down to close this gap or at least retest support at $40, and if we break below that support, you're looking for a retest of the lows at 35 or reaching our price target at 33.7. This is a very strong bear market, and this bounce was more than likely just a short squeeze, so I do expect to see more downside to put in the bottom, whether or not we even do put in a bottom this year. The bullish breakout at this point will be over 47 and 52, and you don't want to be getting bullish on this ETF until we break the downtrend and get bullish confirmation that we're back over the 50 EMA and reverse the bear trend. On the VIX, we were up 18.5% as the VIX did spike back above 30, and we're very close to regaining the bull trend. So as I just said last night, you need to be cautious that the VIX still wants to bounce off of support right around 25 to 24. And so far, we are bouncing off of that support zone. From here, if you're bullish, you want to see the VIX closing and staying below 35 and putting in a lower high and continuing to get crushed back down below 24. But as I continue to warn you, while the VIX is elevated, especially above 30, you need to be expecting more downside. So unless we start seeing the VIX getting crushed and some high volume buying as soon as tomorrow, you should be expecting that next leg lower in this bear market. On Bitcoin, we're currently down about 4%, trading right around 29,000, and we're still holding above that support zone at 28,000. And I still think it's very likely that we do hold this level as support or at least hold up above 25,000. As I've said before, I believe somebody was loading up on Bitcoin at 25,000, which will make this a very strong support zone. In the event I'm wrong and we do break below support at 28,000 or break down below 25,000, you should be expecting Bitcoin to come all the way back down to $20,000. I don't necessarily think that is going to happen, but you cannot rule it out completely as long as we have the strong bear trend. From here, the bulls are more than likely trying to build a strong foundation of support around 28,000 before the next run up to resistance at 37,000 and then the bullish breakout right around 40 to 42,000. So watch this level as support because it is possible we do get a strong bullish rally from this level. On NVDA stock, we were down 6.82%, getting rejected from resistance right around 179 and well on our way to retesting the lows in the 160s or hitting our price target at 150. Remember, these are downtrends until they're not, so this could just be another lower high before we put in a brand new lower low and go hit the price target at 150. But the glass half full view is maybe we're close to putting in the bottom on this stock when we do reach that price target. We're not getting bullish until we get all the way back above 210, and we will have resistance at 179 and 199 on the way there. On Tesla stock, we were down 6.8%, and we did come back down to retest the low at $700. So if we do bounce from here and come out and break out back above 762, that could be a potential double bottom look. However, you cannot get overly bullish on an idea. You still need to follow price action. So if we do break below 700, you're looking for a retest of the low at 680 or a price target at 620. And to the upside, you have resistance at 762, 828, and 856. On Apple stock, we were down 5.64%, and we did close at a brand new 52-week low, so we are coming down to the support zone at 139 or the gap fill price target at 137. So as I continue to warn you, these are strong downtrends, which means we are more than likely heading to lower prices, and Apple is a market-moving stock, so if it is heading down to 137 to close the gap, we likely do have a little bit more downside. However, we did put in a lower low, so we could start to bounce from here off of 139 and not actually fully close that gap. What we would need to see to start getting bullish on Apple would be a bounce from here and start putting in higher highs and higher lows and breaking back above some of this resistance at 147, 150, and 156. At this point, I would not be bullish on Apple until it can start closing back above 156, because anything below 156 is likely still just a lower high in the grand scheme of a larger bear trend. So you need to be very risk off in Apple stock as long as it's below 156, because it could still be trying to go much lower. On the financial sector, we were down 2.75% as we did come back down to support, and we still have a very strong bear trend. The industrial sector was down 3.72%, coming down to retest the lows and still holding on to the very strong bear trend. The healthcare sector was down 2.58%, closing back below all the moving averages and still holding on to the bear trend. The energy sector was down 2.56% after making a brand new 52-week high intraday and coming all the way back down to the 5 EMA, and we still do have a bull trend. So jumping back over to the S&P 500, as you can see, there is nothing in price action or trend that tells us we need to be bullish at this time. So I continue to tell you to expect lower highs and lower lows until we see some type of bullish breakout in the price action and we start to see some evidence that we're reversing some bear trends. Don't try to call a bottom in a downtrend. There's going to be plenty of time to see that the market is bottoming and starting to reverse, and you will have plenty of time to get into your long positions. So continue to be patient, be disciplined, and use proper risk management. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.